Hey guys, welcome back to Margin Hub. In today's video, I'm going to take the time to show you a highly effective high win probability strategy that is built specifically for executing 1-minute trades on the Deriv platform. If you have been trying to find a reliable way to approach the 1-minute time frame and want to see a straightforward setup that actually increases your overall chances of closing those short-term trades in profit, that is exactly what I will be walking you through today. As always, I highly recommend that you take the time to backtest this entire strategy on a demo account first, long before you decide to move over and start risking your live capital. Trading in these markets obviously carries a real risk of losing your funds, so you need to make sure you are being completely responsible with your money. With that out of the way, let's go ahead and jump right into the setup. To get started, the very first step is to apply our indicators directly to the chart. Move over to the left-hand tab on your screen, click on the indicators icon and type Moving Average into the search bar. You will want to click this twice so that we open up two separate instances of the indicator on the screen. Once that is done, go back into the search bar, type in MACD and select it once to add it to your layout, and then we're ready to adjust our settings. Now click the gear icon on the first moving average, change its color to green, set the period to 10 and leave everything else exactly as it is. Next, click the gear icon on the second moving average, change the period to 12 and hit done. Finally, click the gear icon on the MACD, make sure the slow moving average period is set to 24, leave the other settings completely alone and hit done. With our chart fully set up, let's get straight into the entry rules. You have to follow these strictly if you want to see consistent results, and this exact framework works for both rise and fall contracts. First, look down at the MACD. For a fall trade, you need to see a clear hill shape forming on the histogram over the last few candles. For a rise trade, you are looking for a clear valley. This shift tells us the market is starting to reverse, which is exactly the momentum we want to capture. Once you spot that shape, you only enter the trade after the first bar closes below the zero line for a fall contract or closes above the zero line for a rise contract. At the exact same time, you need to see a clear crossover of the MACD lines. That crossover is your second strong signal that price is turning around and moving in the opposite direction. Finally, look at the main chart and wait for the two moving average lines to cross each other. Because of the specific 10 and 12 periods we just dialed in, this crossover tells us exactly where price is immediately headed, giving us the final layer of confirmation we need to execute our 1-minute trades. So here we managed to find a perfect entry on the Volatility 10 1-second index, and we placed a full contract worth $100. Let's see how it plays out. As you can see, we successfully won $100 with the contract never in doubt. Our entry was a success and the asset continued heading down. Here we managed to find another prime entry spot. Notice how this time we're on the 5-minute chart, but the principles still remain the same. We have our hill shape indicating price reversal, MACD-MA crossover, and our two moving average crossovers, signaling that price is headed downwards, which are the perfect conditions to enter a full contract. So we switch back down to the 1-minute chart and enter the trade and see how it plays out. As you can see, we've won another $100 contract. This strategy is good for scalpers and beginner traders, but I would like to make it be known that you should not only entirely rely on indicators to perform your trades. Market analysis and market understanding are crucial for you to become profitable as a trader. I want to show you one instance of when the setup might look promising, but it might ultimately result in a loss. Here we can see that our setup rules are about to come in, and it seems like a promising entry for us to place a full trade. If you look at the MACD histogram, we have a clear hill formed. A crossover between the two MAs of the MACD and crossover between our two moving average indicators, but I didn't enter a trade because market structure was bullish on the greater time frames, and this zone was clearly a support zone, so it was unlikely that the price would keep going down. If you want me to cover those topics, let me know in the comment section below and I'll make a video on them. For now, I'll let it play out for you to see. Price was rejected, and ultimately it started to rise so clearly it was not an optimal position to enter a full trade. As a result, we decided not to enter a contract, and we saved ourselves potential losses. It's important as a trader to be responsible and keen on little details in the market, otherwise you could incur heavy losses. Anyway, that's all for this tutorial, and I hope to see you in the next video.